Hello everyone, this is chessNwine. You might recognize me from the stock twits and Twitter universe, and recently I've been blogging on ibankcoin.com, as well as my own personal website, doublediptrader.typepad.com. I'd like to focus this video on the bullish formation, the cup with handle pattern. The last video I made, I focused on the ascending triangle or the pennant formation with ePay, Bottom Line Technologies. And as luck would have it, that pattern was a success, and I was long the stock. I still have a little bit of it. I took some profits into the big pop yesterday, but I was pleased to see that setup, that bullish formation, came to fruition in a rather immediate way. And keep in mind that the best trades work usually right away, especially if you have the setup that is fundamentally sound with technical analysis. So today we're going to focus on Corning, ticker symbol GLW, and again, for full disclosure, I am long Corning. I bought it into the bell today because I like this particular setup, as well as, to be honest, as well as the broad market acted well in the late afternoon today. So I am long GLW, and what fascinates me about the cup with handle pattern is the psychology involved. Now, broadly speaking, this is the cup right here in the middle of the screen, and this is the handle right here. Okay, now let's look at the psychology behind it. Usually leading up to the cup, you'll have a nice impressive run up right here, as we did with Corning in December of 2009 and early January. The stock actually in the fall of 2009 had been consolidating for many months, September, October, November, and had been frustrating many traders or investors. And then finally it broke out right here and had a nice run up from this kind of middle teens up to the about $20.80, let's call it, right around there, in kind of early to mid January. And then at that point, what happened was it wasn't so much kind of this deep value play so much as it was you had a lot of momentum traders involved. You had a lot of, frankly, late to the party traders involved, and at that point we finally got this reversal candle right here, and that led to a much needed kind of correction along with the broad market here in mid to late January and February as well. And you can see it was a vicious and sharp correction. We bear flagged, and then we came down the 20-day moving average. We bear flagged, we came down and bounced off the 50-day, and then we bear flagged again and came down and cut through the 50-day moving average pretty hard. We bear flagged again and tried to recapture the 20-day, and that failed. And only here in late February did we finally get some kind of bottom in the stock, where the stock came close to testing the 100-day moving average, and then finally was able to reverse, and eventually work its way above the 20-day moving average. And this was the big day right here on March 15th, the successful retest of the 20-day moving average. And then you had some great bullish volume come in off the sidelines once they saw this, and the stock was able to form what you'd like to see on the right side of the cup, which was the bulls kind of recapturing the initiative. And that's what forms the cup here, is you get a nice run up and then a sharp correction right here, which forms the left side of the cup. And then right there, instead of the stock completely collapsing, the bulls say, well, wait a minute, you're not taking this stock down. This is a good stock. We like it. So the sellers kind of exhaust themselves, and the buyers, present themselves in a meaningful way once they see the stock start to stabilize. And that's what forms the cup. And you'd like to see more of this kind of U-shaped correction to a cup than kind of a quick V. You want to see that the sellers kind of took the time to exhaust themselves, and then the buyers kind of took the time to work the stock back up to the old highs. So I'm fascinated by that psychology of the cup. And then what forms the cup really is once we get back up to within pennies of the old high, all the traders who enjoy this run up, they look back at this old high and they say, you know what, I don't want any part of this. I'm going to take some profits. So that's exactly what happens, and that's what forms the handle, is they take profits at the old resistance. But this time, instead of having another deep correction, we get a shallow one, a successful retest of the 20-day, and we've for the most part stayed above it, and now we're trying to move back up and take out these old highs right here around $20.80, $20.80, $20.85, and I think that Corning's on the verge of a big breakout.